Okay, well, hi and good morning, everybody. I'd like to welcome you to today's Payne's Education. It's great to be with you here on this bright and early Wednesday morning. Hope everybody's doing well. Hope you're having a great week so far. Markets are certainly still chugging along here in the month of March, so let's hope we can keep that rally alive here. All right, well, let's go ahead and begin. As always, we've got a few disclosures to remind you about. So bear with me as we let you know that anything we talk about today is just for educational and informational purposes only. These are not buy or sell recommendations. All investments involve risk, and past performance does not guarantee future results. Payne's Education and Charles Payne are not giving investment, tax, legal, or other professional advice. Payne's Education retains all titles, interest, and intellectual property rights of the materials provided and contained herein. The term is payneseducation.com, Wall Street Strategies, and other logos or trademarks cannot be used without express written permission. Charles Payne's experiences are not typical. His results are not a guarantee for success. And lastly, Payne's Education is not endorsed by or affiliated with Fox Business. Making money with Charles Payne is the property of Fox News Network, LLC. All right, once again, this is the beginner intermediate class, so it's great to have all of the beginners here today, but if you're a veteran, it's welcome to you too. But if you are new, here are my credentials. Been doing this for quite some time. Hopefully over time I'll get to talk with you and help you out in any way that I can as well. All right, so on today's topic, we've kind of gone full circle now. We've talked about all the pillars to investing, starting with the three-pillar approach and going through more of a deeper fundamental dive and walking through the peer-to-peer analysis. And then we talked about more the technical side, which helps answer the question of when to buy as well as when to get out, when to sell. And so we discussed different patterns and different indicators that we could use to our advantage. Then last week I was very specific and had a session on looking at very specific entry and exit rules. And so hopefully that was helpful for you to use and follow. And really the idea is that over time you'll begin to develop your own set of rules and have your own plan that meets your criteria and what you're looking to do and your own objectives. But I think what we can do now is we can take that information that we learned even last week and apply that. So this will be kind of a segue from last week's session. So forgive me if I won't go through a lot of review. We'll talk about a few of the things there, but really we want to go back to last week's session where we really honed in on the entry and exit signals, because today we'll show you how we apply that, especially towards more swing trading. Now, for those who aren't aware, Charles has not only his hotline service, which is really more of a buy and hold type of objective. He also has more of a very short-term swing trading service where, my goodness, if you're keeping busy with the with the hotline alerts daily, he might send out 3 or 4 different alerts with the swing trading, and really the objective is just to get in, make money, get out, that type of thing. So it is much more active. It does require a lot more maintenance, no doubt about it, but it's certainly appropriate for those people that want to do more of those shorter term types of trades. In fact, I'm just curious, go ahead and chat in yes or no if you are a subscriber to the swing trading service by chance. Just curious. See a lot of no's, and that's to be expected. Oh, there's well. See a few yeses there. Fantastic. Okay, great. And so I'm going to show you what that's all about, and how you could just even do this on your own. If you find a good opportunity. In fact, I dare say there are often times where I'll look at my same stocks that I'm just holding on to from a buy and hold or a long-term perspective, and if I see a short-term entry point, I might just go ahead and do a swing trade on that same stock. Why not, right? Make money in the meantime while you're waiting for your long-term holdings to finally make a move up. So that's what we'll do today. We'll talk specifically about determining our setups and entry and exit signals, how we go about setting our targets, how we determine our exits and our stops, and to show you how we can monitor the trade. If we have time, I might even show you the little calculator we can use to help us out with that as well. All right. If you have any questions on that, feel free to chat in. Well, as long as it's pertaining to the topic at hand here. All right, so as a reminder, again, this just goes back to the weighted combinations that for buying and holding, our priorities will be looking at the fundamentals, although we still apply some technical analysis, which is why I still use a lot of the same rules for my short-term trading towards my buy and hold. I like to feel I'm getting in at the right time. If it's going down, why would I buy in now? I might as well wait for a better entry on that. But it doesn't have to be perfect, right? There are times where Charles will send out an alert, he gets in, and then the stock does go down, and he just holds on, right? Because he understands that eventually the technical side will catch up with the fundamental side. But when we're trading, I consider trading more shorter term, right? So then it does require more maintenance, and it is a little bit more demanding in terms of when would be the appropriate time to get in, because we've got to make sure that the return we get on that justifies taking the risk on the trade. So we want to make sure we've got the right technicals, and so we do put more of an emphasis on the technical side of trading. right? So when we talked about the investing style and approach or buy and hold, more longer term, which nowadays is more like 3 months or now, used to be years and years. But there's a graph in the Payne's Perspective the other day that just showed how that's been dwindling down to where it's just so shorter term now. People's horizons for buy and hold. I still consider it more months to years, quite frankly, or years to decades, quite frankly. But then we also have our trading, swing trading, which is more shorter term, which is looking more weeks to days. Sometimes it might even be a day trade. Now, we're not really in the business of promoting day trading, but if it makes your desired goal and you get in, make your money, want to get out, that's nothing wrong with that. Just be aware, though, and I will point this out, is that if you do more than 3 day trades over a 5-day period, typically the broker will code your account as what they call a pattern day trader. Not a big deal, but now they do scrutinize your account a little bit more. And they do require that you have at least $25,000 in the account if you're going to be doing more day trading. Okay, so just be aware of those limitations there if you don't have that capital, that you want to be kind of stuck in that. All right, but you'll notice that what we do here is that we're not teaching always to just be a long-term buy and hold investor. In fact, just 60% of our portfolio is allocated towards that objective, whereas the remaining 30% would be more towards the short-term swing trading. Okay, and then if you're wondering where the other 10% is, well, that's just what we call our Grand Slam big winners, which would be opportunities that pop up. Sometimes they're just on stocks you're already holding on to. There have been times where my short-term swing trade has turned into more of a longer-term trend trade, just because it's going the right direction. Why get out? And you'll see Charles do that on occasion too, where he may raise up the alert or the target than what he originally thought, with the idea that, hey, there's more opportunity to trade with than that. All right, so what exactly is swing trading? What do we mean by that? Well, it just really is, in a nutshell, it's just a trade that capitalizes on the move from basically a support to a resistance, or a resistance to support, meaning that, yeah, I could trade this both ways. We've been told it's good to buy low and then sell high, right? On occasion, though, if you're familiar with bearish strategies, and we'll go through trading to the downside next week's session, it's possible to take trades even to the downside. Now, I'm not a big fan of doing that, trying to trade it both ways, because remember, our trend is our friend. We want to make sure we keep it that way. But if we have a stock that's in more of a downward channel, where it's coming up and hitting resistance and falling down lower, well, yeah, we might go out and sell short or buy put options, take a bearish stance to make money to the downside. Okay, so that's what we mean by going from resistance to support. So visually, it'll look something like this. Right? How nice that is. In fact, someone chat with me and tell me what type of price pattern is something when you see this on a particular stock. What is it that we're observing here? Yeah, very good, Steve. And Kevin and others. Yeah, it's what we call a channel, specifically an upward channel, where it's kind of cool when you find stocks that just have that tendency to trade within a kind of a parallel, I guess it's perpendicular range here. It's not, it's parallel, isn't it? Yeah, parallel range with these lines where we kind of hit the same diagonal level of support, right? When we're upward trending, it might be even a moving average. At the same time, we tend to have roughly about the same moves where we're hitting maybe more of a diagonal level of resistance too. And so this area we can actually measure between our support and resistance, that when we see an opportunity, it comes back and pulls back and bounces near that support level. I look for my entry to buy in, and I measure that distance and then set my target to get out at that resistance. And like I say, I wouldn't take a bearish trade from the high down to the low, because that's going against the trend. But I would just be patient and look for yet another new opportunity, and then buy and sell again. It's kind of fun when you have stocks like that. It's just, I remember having a stock that did this nearly weekly. So sure enough, I'd go in and just do a weekly trade, get in, get out, make a few bucks, come back in, repeat the process maybe a week or so later. Okay, so that's ideal. Now, can we get away with a channel that's more sideways trending like this? No, the answer is yes. It would not be my preference, though, I have to admit, because those sideways channels, boy, they can really be treacherous sometimes. I mean, you're always wondering, well, which way is it really going to break, right? Just when you think it's going to bounce up here, it kind of, it kind of does this, then it breaks down below, and you're like, ah. But again, it's not a big deal to me, because at least I know where my exit would be, right? The other two times where I shortchanged myself and I exit out up here, and then wants to break out higher. Well, again, I could just look at that for yet another new entry. Remember how we talked about how we can look for a breakout for a bullish trade, okay? So, but yeah, so if you see a stock that's really kind of stuck in that sideways pattern, I sometimes scratch my head when I see students who are going out and taking a very bullish long position on that. I'm thinking, well, even for a buy and a hold, does that really meet a buy and hold objective if we're just going sideways? Not really. So I want to trade what makes sense for the situation. And so if we are just going sideways, yeah, I may skip it all together, but if not, I may decide just to do a swing trade instead. Probably be more appropriate. All right, so when we're analyzing these stocks for a swing trade, we go through the same analysis we talked about before, where our number one priority would be looking at our trend. We look for the upward trend, have a series of higher highs and higher lows. It could be sideways trend, though. You can get away with that too. Define where your support resistance levels are at. Remember, we talked about our support as being our floor, resistance is our ceiling. And keep in mind, as always, that our old resistance, once broken, can become new support. We've seen a lot of opportunities just this last week or two where stocks are doing exactly that. And then, of course, then we follow through looking at things like our volume. We have a lot of volume on the breakout. Check out for any candlestick patterns or price patterns forming. And then, of course, you can utilize your indicators. In fact, this might be one time where we talked just a week or two ago about using different indicators, especially oscillators, things like maybe a stochastics, or combining that with maybe a MACD, where if they're both down in the lower reversal area and beginning to bounce back up, well, chances are your stock is doing the same thing. It's pulled back and ready to bounce up as well. So you might follow some indicators to give us some clues that if they're showing signs of reversing out of that lower reversal area, well, great. Then that would suggest that our stock is probably poised and ready, if not already doing that, quite frankly. So just keep in mind, oftentimes those indicators can be a little bit lagging, but if you need that for extra confirmation, or at least for subtle signs that suggest that, clues that suggest the stock is ready to bounce up, then great. We can use that to our advantage. All right, so how do we structure these trades? And again, there are different variations of this. I'm going to point out and teach what Charles teaches, which actually I think is a pretty good system for the most part. Sometimes I think he really shortchanges his trades, but he has his own objectives in mind, right? In fact, oftentimes he's just looking for maybe like a 10% move or around that area, and then he'll get out regardless. Okay, that doesn't mean you have to, though. But this is kind of the summary of what he does. That remember, we keep in mind that 70% of the analysis is technical. So ideally, what we want to do is look for an entry that's on a near-term pullback, and then try to get in on that near-term support. Okay, so we talked about last time how we have a decent candidate of a stock, then we look for the setup where maybe it's in an upward trend and starting to pull back, and then we look for that area where it may just bounce off support. Could be a horizontal or a diagonal level like this. Okay, and so that's our setup. And someone remind me again, what would be the actual trigger? What would be the signal then if we're going to get that bounce? What would tell us that now is the time to get in? Yeah, very good. Sean's got it. I love how we're very specific. And I challenge anybody out there, all these services you see, in fact, it's just, it's not surprising, but it is kind of, I don't know what the word would be, just humorous maybe, to see how much advertising there is now for all these different stock gurus. 2 years ago, you didn't see it because the markets were going down in 2022. But after last year and now this year, when the markets are being bullish, boy, they just come out of the woodwork. Come join my system. I've got the best system. I see one guy that does one trade a day, one stock symbol a day, and I check them all out. I'm open-minded enough, but I kind of, I think, boy, I'm in the wrong business. I should really go out on my own and create a system and just sell it and hope that people buy it, make my money that way, I guess, right? Because oftentimes it's nothing really unique at all. It's just a twist on the same old thing, quite frankly. But a lot of times they don't really tell you, right? They just say, yeah, buy on a bounce, maybe. Well, what does that mean? I love how we're very specific, and we say, well, we look specifically for a close above the high of the low day. So if we've got that stock moving up above the high of our lowest point, okay, then great, we've got permission to enter in. Now, it doesn't turn out 100% of the time, nothing ever does, but oftentimes we'll get a nice little bounce. I certainly entered into a few trades last week that were showing exactly that. So far, thankfully, they're doing the right thing, okay? So that's what we look for. Look for that entry near the support area. Now, what we do is we set what I call the ultimate target. Before, we might have called it like our T2 or target, and that's fine. But I consider our ultimate target to be where we measure, we determine what range it should be. Now, some people, again, like Charles, might just use a percentage. If you're happy with a 10% or a 5% range or 15%, 20%, whatever your goal might be reasonable, of course. I think 20% is, getting a little bit out there. You might not be as successful just because it's not every day that a stock will make a 20% move from a low to a high. In fact, sometimes some stocks are lucky to do that in any given year. But for the very short-term moves, then yeah, that's what we'd be after. So I say, instead of just looking at it from a target, a percentage perspective, let the chart tell us, right? That's what we like about technical analysis. If you can identify a prior resistance, that prior channel, measure it, determine what the average prior move is. If you see a price pattern, measure what that distance should be and assume that should be your target. In other words, go with what the stock is using, not just some arbitrary number. Okay. Right. So then what we'll do is that we could buy in, put our target up there as an ultimate target. But then what I like what Charles does is he has what he calls a trading target. We'll just call it our T1. And typically all that is just, it's generally half the distance to the ultimate target. So if we're buying a stock at $20 and our ultimate target is up at 30, that's a $10 move, right? That's our ultimate goal for that company, for that move. What we'll do that'd be our, let's just say our T2 for our ultimate target. What we'll do though is set a T1 target, which is about halfway. So if this is a $10 move, then certainly if we come up to $25, then what we'll do is that we'll consider taking out half of our position. And then at that time, we can raise up our stop. Okay. Now, what I like too about this is that it also helps us to determine where our stop might be. Is that if this is a a $5 move, then our stop order might be just the equal distance below our entry of $5. So we might have our stop or exit down here at 15. Okay, so generally this distance is the same from our entry point. Now, thankfully, if the stock, instead of going down, comes up and hits our T1 target of 25, like I say, we'll sell half of our position, then we'll move up our stop to at least break even, if not higher, and then have the remaining amount to be sold at our ultimate target up here. So what I love about that is it's so true. I've seen this in my experience that sometimes stocks will bounce up and they come up to that 50% median line and then they just kind of fall down again. It's like, oh, in fact, I've got a trade going on right now that's doing exactly that. We'll talk about. So I like it is that at least you are locking in some of your profits. And then depending on where you put your stop at, you might even get kicked out and still lock in some profit because you're above your break-even point. So how nice that is, to where the worst you'll do is have a profit, right? Or at least break even at the very worst, okay? But I also like this, that, hey, if things do kind of stagger around here for maybe a few days, we're still in the trade, that if it wants to break out, move up higher, then great. We still have a position in that to lock in 100% of our profit, on that remaining amount of position there at our ultimate target. All right, so hopefully that helps you visually, but just to describe it here is that our trading target one and stop is typically equal distance, and we close half the position when we reach target one, and then after closing, we'll raise, our stop should be raised to near break even or higher. All right, so I'm going to bring up an example, then we'll look at our own examples here too. I think that's probably the best way of applying this, just showing you how we use this in doing a stop or a swing trade. Let me bring up our Thinkorswim platform here, see where we're at with our markets today. Very good. Dow Jones up about 127 points. That's kind of nice, kind of an inside day today after a bad day yesterday. Again, this rally is still very much alive and well. In fact, I look at this as being an opportunity when you get a short-term pullback, just looking to see if we might get the bounce now. So our Dow's moving up a little bit. Our SPY, or I should have done SPX, still beautiful looking trend overall, right? Look how, I mean, would it be fair to say that we're even using maybe this 20-day moving average as a diagonal level of support? So whenever we come near that again, look for an opportunity for the bounce on something like that. If we bring up our NASDAQ, see where we're at here. Oh, check this out. So what do we have going on the NASDAQ today? What can we observe here? Kind of the same idea with the SPY, right? We more or less kind of hug this 20-day moving average. This line is our all-time high that we broke out above. Now it's pulled back after 2 days. Are there any potential clues here that the NASDAQ may be ready, poised and ready to try to bounce back up again? What do you see? Very good. John's got it. Yeah, it's up today, which is good. We're near an area of support, our old resistance, our area that we broke out above. We only had a 2-day pullback, but now we're getting a bit of a hammer. right? We like hammers, right? Because they typically are nice reversal patterns for the short term. I mean, we don't have to look back too far to see how well that's played out with this particular stock. My goodness, right? Here, a little pullback, 2-day pullback as well. Got a hammer. What happens? Next day, boom, shot to the upside. Okay, last time we pulled back here, 2 or 3 days of a pullback, tiny little hammer. Again, a hammer truly should be a tiny little body in a long shadow, at least 2 or 3 times the distance. But I'm not so particular about that. It doesn't meet my textbook definition. There are textbook traders out there I've noticed that are big about, it's got to meet this definition. It's like I don't think they trade in the real world, right? They're getting their little books. We trade in the real world, and so when I see that, I'm like, hey, that looks to me like a hammerish type of pattern. So I should suspect that it's probably overdue to bounce back up, and sure enough, it did. It gapped up higher. So why would now be any different? Right now it's early in the day, so I might wait to see what happens towards the end of the day. But if that produces a hammer, I would expect it. I'd be surprised if it doesn't, but I would expect it to get the bounce and be a nice little follow through. Okay, so if it's doing that, then chances are there are a lot of stocks that are moving up. Now, I'm not surprised that the NASDAQ is moving up because we've had the likes of companies like CrowdStrike, I noticed. I want to take a look at them this morning. Holy cow, right? They really did well with their numbers. Could have gone either way because I remember that I think PANW is in that same group that went the other way after their earnings. So I was really interested to see what would happen with CrowdStrike. But they did very well in that nice little gap up after pulling back to maybe a 50-day moving average. Okay. So we might even come back and look at that potentially a breakout trade. It's kind of an expensive stock. But since we're on this, I wanted to use this because actually this was a swing trade that Charles had sent out an alert not too long ago. It was just about a month ago. So let me zoom in here. Let's show you what that would look like. For those who subscribe to this, you'd get an email alert that looks something like this. So this is back just on the end of last month on the 22nd. So it hasn't been a month at all. It's just been maybe a week or two ago, where he says we're going long, and again that means we're going to buy. Okay, and he shows the price that he entered in at. So this is on the 22nd. Let's see where we're at on the 22nd. That would have been this date right here. Okay, so was that a pretty good looking entry based upon the rules that we've talked about last week? This date right here. And not bad, right? Because one, we had a good candidate. We've got a good strong upward trend. We definitely had a pullback, right? Even gap down lower. My goodness, fell down. Look where we came down to, though. If I zoom out a little bit again, apologize for all the artwork back here, but it's kind of tough to see. Maybe if I delete this. Let's just get rid of a few of these guys here when it was going sideways on us. You can kind of see, there we go. Kind of see that in the past, it certainly has bounced around that 50-day moving average. Now, certainly it was well above here, but it's not uncommon for stocks to use an intermediate term moving average like that as a diagonal level of support. So it came down there. That was not the signal, though. But were there any clues on that candle? What type of candle did we have here? Was it an open or a closed candle? Yeah, it's open. So even though it was bearish, I mean, it clearly gapped down lower in the morning. It gapped way down here on that moving average, dipped a little bit below it. But again, having that shadow at the bottom tells me that who was battling it out for that day? The bears definitely won, but there was a fight, wasn't there? Because the buyers stepped in. We didn't close anywhere near the low for the day. And it didn't even close anywhere near where it opened up at for the day. It opened here, dipped down, but by the end of the day, with that open candle, that's what I love about these candlestick patterns. They can tell us a story that, oh, they closed higher than where it opened up at and fought back from a low. So again, I should be, getting some clues here. That just maybe things are ready to bounce up. Well, this next day came the signal. All right, so Charles enters in, bought in around the 305, almost 306 area. His ultimate target was around 331. I'm just curious here. If I take 331, tracked out or divide by the 305.86, not quite a 10%. That's more like an 8% move. So 331, if I come back to our chart, I could see that. That'd be right around here. And we didn't know it was going to hit this high before, but it is the area that we, gapped down from. I don't know if you can see that right here. It's about the 330. Well, 331 is actually a little bit higher now that I look at it. about here. So he was probably looking at this prior resistance high back up here, just that area. I think I could have gone a little bit higher at 340 myself, actually. But nevertheless, he's looking for that general area of about 331 as his target. Okay. So that's roughly about just over a $5 move. Okay. So, excuse me, not from a time out, $25 move. I can't do math this morning. So to go from 305 ultimately up to 331 is about a $25 move. Let's say 306 area there. Okay, half of that would be 12 and a half. So then notice that our trading target, sure enough, 305, halfway up to that is about 12 or so, would be around the 318 area is our T1 target. And then our stop order, also checking that out. Oops, that's our adjusted stop. So this is our original stop. Here we go, 293. Okay, so once again, that would be about $12 lower than where our entry point would be here. Okay. Now, what had happened with this is that the stock moved up so much just in that same day. So we entered in at 305.86. It just doesn't do it justice on this chart because it's just such big moves that this company has. Let me see if I can elongate that maybe a little bit there. That it really shot up, and at the high for the day was at 313.66. So what would have happened? Well, would have hit our initial target. Or no, we didn't, because we hit 313.66. I must be getting that wrong. Because trading charge at 318. Well, let's see what happened. I brought it up here. In fact, let's bring up, see what it did here. I brought up the actual alert. Looks like it did an options trade on that too. And by the way, if you are trading options and you see these alerts, these are always long options. Don't ever be, misinformed or misconstrued thinking there might be a covered call. It's never a covered call. It's always a long position. On occasion, you might do a long put, but he's never sent out a covered call alert. It's always going to be a long option alert. Okay. Let's see what happened here. So on the 26th, actually, here we go. We're taking partial profits at 319. So sure enough, it did hit the initial trading target of 318. This is on the 26th. So let's see what happened here. So there's our entry at 22nd. A few days later, there we go. That makes sense. On the 26th, sure enough, it did pop up. Would have met our initial target, our T1 target. So then we should already have the trade in place. But, and I'll show you how to do that with the bracket order, but we're closing half of that position, a little bit higher, in fact. Then he raised up the stop. Whoops, didn't mean to do that. Okay, and then he also sent out an alert saying, hey, we're going to even raise up our target from 331 up to 340. Okay, but then what happens on 3/1, it hit the raised stop loss at 315. Now remember, our entry price was at 305. So see how well that worked out, because the stock hit our initial target of T1. We raised up our stop and our higher target. Then it came up and then it started to slough off a little bit as of March 1, and then eventually came down and hit our raised up stop order. So what's kind of cool about that is that, again, we made money on both partial positions that we have on that. So I like that trade. If I come back, 3/1 would be right here, and sure enough. Now let me ask you, was that a good exit on that day? I know it's easy to say in hindsight, but did that meet a specific rule that we also talked about last week? If you know the answer, what is the rule that was met here for an exit signal? Very good, Linda. Yeah. So remember, we have down here for an entry, a hold to close above the high of the low day. Here we're rallying up higher, rallying up higher. Here we had a bearish day, but it was an open candle. So gosh, it looks to me that it still closed above the high of our low day. We popped up again. Then suddenly this day, wow, this is our highest day so far. There's the low of our day. That day met what we call a kablot pattern. Just kind of imagine your stock exploding. It's a close below the low of the high day because it closed down here. Beautiful. I mean, that's, to me, is the ideal type of swing trade where we entered in, held on, even raised up our target, took partial profits, raised up our stop. Then we have a close below the low of the high day. It triggered our stop. We locked in some profits, came down. Then we, of course, waited to see what earnings announcement would happen there. Okay. because who knows what earnings could have done after seeing what PANW did. So thankfully, they've now had a positive move to the upside. All right, any questions on that? Is that making sense, the mechanics of how we would put in, or at least analyze that for a swing trade? All right, let me go back here. I know I might have missed a question or two. Give me a moment here, just very quickly. Just scrolling through. Good participation today, great. All right, now to help us out with this, I wanted to introduce you also to, and some people have already chatted in about this, that we do have what we created what's called a swing trading calculator that can kind of just do the math for us, more or less. It's not hard, but it helps us to just kind of check our numbers and see if it makes sense for the trade. So to show you this, if I come in to our Payne's Education site and go up to our resources, we can come down to our stock investing worksheets and scroll down to the very bottom, and we have our swing trading calculator. Now, it does require Excel. So just as a reminder, again, we're not computer people, we're not programmers. If you don't have Excel, boo-hoo on you. Maybe time to upgrade, that type of thing. It maybe have bugs every once in a while, but for me, it's pretty simple. It seems to work okay as far as I can tell. Just have to remember to enable editing up at the very top. Okay. But this will allow us to just punch in really two numbers. I might say my trading amount. In fact, let's see what we have in our account here. I don't have a lot of cash to that one. Maybe I'll go to my IRA account. I've got about 100,000. Let's just say 100,000 in there. That's easy enough. Make math easy. Oops. Did I type that in wrong? Oh my goodness, let's make it bigger. Not sure what's going on with that. That's new. Don't remember seeing that issue there. Wonder if I have to, yeah, should we try 99? Yeah, that's curious. Unless I'm wondering, it's been a while since I used this, maybe I have to put in the trade amount as, what maximum amount that we can trade. I don't think it is that. I think it's that. So we'll try this out. Kind of curious. And then we have to widen out our columns here is probably what I'm thinking there for that. So I'm gonna have to go back and readjust that. Nevertheless, we'll use this. And let's go through an example. I've seen with these markets bouncing up, my goodness, I've seen quite a few examples of, maybe if we look for a bounce off support. Okay. For example, I noticed that stocks like Hilton, would Hilton meet a valid entry signal here? Yeah, we've got a nice upward trend, a little bit of a flag pattern so far today, trying to get a bounce up. Now, I believe we've already got a position in that, so I don't really want to duplicate in that account. We entered in back here, doing very well. Nice strong upward trend. We've got earnings out of the way. If we have to, we can come back to that though. What about the likes of, oh, I know. What about Co-op? Let's maybe take a look at this. What do you think of this? Would that be a potential entry signal here? Well, just as a refresher, let's come back to this for a moment. Oh, how about we try this? Right, for an entry setup, if we're near support, and we can buy on the bounce off of support, that could be a diagonal line, could be a moving average, could be a horizontal line of support. Remember that old resistance level can become new support, and then we have our trigger, which would be our close above the high of the low day. All right, so if we define it, kind of go through our checklist, do we have an upward trend? Well, that checks out. Got higher highs and higher lows. Where are we at? Well, technically today we could be just right at the prior high, but remember, if we're upward trending, we should continue to get a higher high, right? So we had a pullback, and now are we getting a bounce off support? Okay, that'd be our close above the high of the low day. So what kind of pattern do we have going on right here? What do you identify that as? Sean's got it. Kevin's got it, yeah. So we've got a flag pattern. In fact, I could see little short-term flags here, but you know what? I might just zoom out. I mean, I could break it up like this, I guess, but I really could look at this and then just qualify this as being just a long-term type of flag, something like this happening. Okay. And now we've got the pullback. Here's our low day. It can be a green candle. In fact, technically we could have had an entry yesterday, but when I've got a downward diagonal resistance line, I want to make sure that we're breaking out above that. And so far today we are. Day's young. It could always pull back at the end of the day. Don't see exactly a lot of volume per se, but still going in the right direction. Again, if you like to use indicators, I'll just throw a whole bunch up on here right now. Take a look. I guess our RSI is moving up. MACD, right, moving on up like that. I've got an arrow on our stochastics indicator, so that turned green. If you like the money flow index, that's about to get a higher low here from way back here. You know, still pointing down though, but again, these are a little bit lagging. Maybe because there's just not a lot of volume today though. So kind of conflicting, but you know, to me, it's a matter if I just hide those for again. It's just a matter of saying, well, do we have, you know, the priority being met? And most of my indicators is pretty much the last of my priority here. Okay. Well, can I use this to determine what my target would be? Well, sure. You know, if I look here, that's what 55 up to, I don't know, what is that, about 67? So it was about $12 move maybe from there to there. In fact, let's just take a trend line. You know, I don't have to be that specific. You know, I don't have to zero in on it. I just have to get an area there. Let's duplicate that and see if that worked out over here. Wow, would you say that's worked out pretty well? That prior move after getting the bounce, it did exactly that. So wouldn't I just assume then, if we are indeed bouncing here, that that should just do the same thing all over again? So 70 plus 12 is around 82. That should be my target up here. Now, it may not always play out that way. Maybe this is getting tired. Maybe it's ready to end the trend and fall down lower. But let's face it, that's just all emotion, is it not? I mean, nobody can see the future. Okay. I could treat for that for shorter term as well. Like I say, you could just divide this up. But you know what? In a way, our swing trade's going to do exactly that anyways, is it not? Because we'd have our ultimate target up here. Let's just call it T2. But then if we cut that in half, T1, chances are we'll take half of our profit. What about a $6 move, which would be like from here to here or here to here, and yet still be in the trade that if it wanted to move up higher, then we can realize the majority of our gain. Okay. So I'm all right with that. So we could let the computer or this little spreadsheet do the work for us. You know, if I am, let's bring that back up here. If my entry price today is at 74.80, let's just say. My ultimate target, we said would be at 82. Voila, okay. So so we've already had the bounce. That's right. We're not going to get a total $12 move here. It's gonna be a little bit less now because we've already had that, you know, bounce up today, which is good. That's the signal. So our trading target would be 78.40. Our stop at 71.20. Now let's just check out and make sure that that stop would make sense. Okay. Oh, you're right. The maximum share. So I bet this trade amount. Surprised we don't list that here. So trading amount is really the amount that we're willing to put in any one trade. It's like $5,000, right? Let's say we do 5% of our portfolio. That makes better sense, doesn't it? Yeah. So determine how many share or what max amount that you're willing to allocate is really what it is into each particular trade. I'm embarrassed I forgot all about this. You know, I use this on occasion, but sometimes I can just do the math in my head, so I don't have to bring it up here. But this is kind of nice to use to be able to see. And so, sure enough, divided by our entry price would tell me maximum I could buy would be 67 shares. That makes better sense. All right. And knowing me, I'd probably round it up to 70 because that's just the way I am. Let's check this out. Let's see what 71.20. Now, 71.20 for a stop would be about right here. How do we feel about that? Having our stop right there. Yeah, a little tight. Okay, now if it turns out that we go through the calculator and runs through the numbers and it shows, well, our stop's like way up here, that alone might tell me that, you know what, maybe my entry is a little late now. Maybe, yeah, we had a bounce, but maybe I'm getting in a little bit late to the party if the stock had really moved up quite a bit. Okay, I'd have to have an even bigger move up here. In other words, we're kind of, our reward to risk doesn't make any sense. Maybe it's more of a 1-to-1 than like a 2-for-1 reward to risk. Okay, so while that calculator will tell me that we should be here, nope, I'm going to use what the stock is using. What we've seen has been, my goodness, what we've seen has been our support area, which I would say is about right here. So I'd say around 70. So I might lose to say $5 on that trade. All right, so if we came down and broke down below 70, now we're hitting a lower low. So I've lost $5. My target is 82, so I have to admit this isn't quite a 2-for-1 reward to risk, because now I'm only going to get about a $7 gain if we go up to 82 for a $5 loss, right? I'm still going to put this in because I can still make money off that. But be careful if you do this every time and you're seeing, not the greatest of ratios here. It's going to work against us because we're not going to be right every time. And so when we're wrong, we want to make sure that we are taking a smaller loss, and then when we are right, that gain is going to more than offset all those prior losses that we have. Okay. But I'm trading in the here now, so I'd say let's enter in today on this, and then we'll put our stop just below that $70 area there. All right, so the way we entered in these trades, and what I like about this is it's really more or less automated. It's what we call a bracket order. Okay, where we can put in our buying order and at the same time have our target up here. We just put our mid target and then have our protective stop down below. So either way, whichever way it goes, if it breaks down below, then we'll be stopped out. But hopefully if it'll move up, it'll go ahead and sell half of our position. Now, with that said, it is possible to create what we call a 2-bracket order where we can have even the upper target up here. That gets a little more complex. So I've learned over the years now that I just keep it simple. That for monitoring our account, then just let the one trade play out, and then we can always add and raise up our stop on the remaining amount. Okay. So, all right. So if this is our entry, and our initial trading target would be around 78.40, I can live with that. We'll go to 82. So I've roughly about a $4 move, just shy of that, not quite the $5 move we have for our initial target. Might just say like 79. So let's do this. Let's go to our trade tab, hide our options here. The way to create this order is we're going to right click on our asking price. We're going to create a buy custom with OCO bracket, stands for one cancels other bracket. Okay, and when I click on that, it'll create the template for us down below. Right, we knew that we could buy, what was it, 67 shares? Yeah, I'll probably just cheat and round up to 70 a little bit here. I like round numbers for some reason. Okay. So we'll buy it right now. I can even just buy it in the market if I'd like. Then what we'll do is we'll set our initial target, our first target, as a limit order. And what we'll do is we'll just sell half. So we'll get out of half of our position, 35 shares, and we'll put that in around the 78, was it 78.40 area? Let's say 78.80. Let's make at least $4 off that. Make that a limit. Remember, limit is good for your price or better. So if it gaps open to higher to $80, great. But you notice we're only getting out of half of our position. Okay. But unfortunately, if the stock really starts to fall down lower below 70, and knowing me, I'd probably put that a little bit below 70, like 69.93 or something. You don't want to put an even number there. It's really kind of weird how even numbers, like people do that, and so the market maker will just stop you right out at that even number. I've been kicked out literally at the low for the day. So I generally put mine a little bit of a weird number below, an even round number like that. And we'll make that GTC as well. But here we'll sell the entire amount. Okay, so just to decipher this, we're buying 70 shares in today. If the stock falls down lower, below our support level, then we're getting out of the entire position, which makes sense, right? We'd want to exit out of everything, be done with it, minimize our loss on that trade. But fortunately, if the stock can continue to bounce and move up higher, if it hits our initial target of 78.80, then we'll sell half of our position, 35 shares. And what would happen is that we'd be left with the remaining 35 shares. And at that point in time, if it sells half here, then it cancels out our stop order. And then it's just up to us to go ahead and put in another new bracket order, which is really easy to do because we might even raise up our target. And of course, we'd want to raise up our stop to at least break even on that. Okay. All right, so let's confirm and show you and show you how this would look here. We'll say this is a swing trade, and I better put this in my other account, huh? Just so I've got money for that. Usually I'll put in my targets here so I know what I was looking at to begin with. 82 based off prior flag pattern moves, flagpole. I should determine if I am stopped out just below 70. We said that's about a $5 loss. It'll be a little bit less than that. But with 70 shares, I mean, that's only like a $350 loss. So I can live with that, right? That's far less than 1% of our total portfolio value here. Okay, so we'll say stop was at below support 70. All right. I'm going to send that off. Looks like it filled. What's great about this is that now if I come back to our charts, it'll put those little brackets on the trade for me, on the graph for me. So there's our exit, there's our stop, and there's our target. So like I say, it's more or less automated. Okay, it's just what they call a bracket order because it's a bracket. Now we're entering into March Madness. I love this time of year, March Madness. Everybody's filling out their bracket. That's what we've got here on our order here. Yeah, now you could put an alert, but of course you should be notified. You typically get an email from Schwab that says, hey, your trade went through. But you're right, you could put an alert that says, hey, you've been triggered on that to get out. So what we do now, let's say if the stock did move up. In fact, let me do this just as another example here. We put in a swing trade a little while ago on Disney. Okay. Now, can you see some similarities with what we did with Disney here? Now, Disney really gapped up higher, gapped up to this level, popped up, fell down for a few days, got a little tiny candle, little hammer, then it started to bounce up. So, okay, great. Not really in love with Disney, so we just treat it as a swing trade. We entered in, bought our 40 shares. You can see our bracket already there, 40, and then we just put our ultimate target up here. But curiously enough, I'd argue that we're pretty much about in the mid-range of that target, are we not? I mean, it kind of came up and hit it. So rightly, if I had done the trade, the way Charles does this, I could have sold half already, and maybe I should, because now we're pulling back. Okay. So let me do this. I'm just going to amend this trade. I'm going to cancel out these orders. And let's get out of part of our position. We've only got like a $3 gain on this. Okay. But let's just to show you how this trade would work, because if I were to sell $3 of Disney here, half of it that is, to lock in our profit, we'll just sell it where it's at right now. Okay, so we'll say that we met half of our target. What we could do now is raise up our stop, because admittedly it's starting to pull back on me. So if that had happened, you'll notice now that we're left with 20 shares. I just come back to my monitor tab. I can right click on my Disney, create a closing order, and choose with OCO bracket. Okay, by doing this, it'll take me back to the trade tab where it pre-fills in with the correct quantity. And now we've got our bracket. So we've got a limit. So I'll still put in my upper target, which I forgot already where it was. It was like up here around 120, wasn't it? Should have written it down. I think we're looking around 120 originally on that trade. Oops. So we'll put it at 120. But then what I can do, and let's make that good till cancels as my limit, is I can raise up my stop. We entered in at 107.80. So, maybe put that a little bit higher. So at least I'll do is lock in some profit on the remaining amount as well. Maybe I'll put like 108.50, just to give it some breathing room. Got a hunch this just may go sideways. It may come all the way down to where we bought in at. If it does, so fine. Maybe we'll treat it for another swing trade. But if it can find a higher low, then I'm giving it that opportunity to do that and not be stopped out. So that's why I gave it a little bit of room there, but still a little bit above what we paid for it. So either way, I've created a win-win situation for me, theoretically. Now, it could gap lower on bad news. You never know, right? The stop won't help you out on that because it just becomes a market order there. But the reality is that the idea is that we've already locked in some profit. So now if it does pull back and we're stopped out, then we've also locked in a tiny little bit of profit on the remaining position that we have left on that trade. Okay. So I'll confirm and send that. And there we go. Another new bracket. All right, Kevin asked, was the Disney entry only the hammer? At the time that we were putting in the trade, we actually had a bullish candle. Yeah, it was actually up here. And then by the very, very end of the day, so rightfully you're right. That would not have been the entry. That's why we want to wait towards the end of the day. But the time that we were, teaching the class, it was a bullish candle. It was all the way up here. So I said, oh, okay. Still turned out to be a good entry though. Greg, is there a printable trading plan for swing trades like we've used in the other classes? Not really. You could just maybe print out that slide. I'll bring that up at the end here about how we structure those swing trades. If you could put notes on the chart itself, so you could do that too. You could put your lines in or put little rectangles or circles here. I just put the note on the graph as well. I usually put my notes in the trade itself though, so you remember what we did for the strategy. As far as getting the quantity to share, yeah, go back to our quick start class that we have. We walked through and show you how to do that. And now, if you wanted to enter in your T1 and T2 at the time of entry, you could. To show you how that would work out is that when you're creating your buying order, your bracket order, you would actually make this a first triggers to OCO, but it gets a little bit complex, right? Because now what we've done is we're going to add, we've already got our initial order here, but then you'd add your second limit order. So create a duplicate order. It's like this would be our T1 target, whatever that was, 115, let's say. And then our ultimate target, T2 target, would be this guy down here at 120. And then you'd also create another stop. The problem I've had with this, though, is that, we could do our stops, but the fact is things are going down. I want to get out. So I can't put in I don't know where my new stop would be. That's the problem with this second stop order on that first triggers to OCO. Okay, just so you're aware, there's a little bit more advanced, but because if I put that higher, then I'll just get kicked out because it can look at today's numbers. So I've not found that to be most useful. Like I say, I generally just keep it simple by doing a first triggers OCO. Let's just do it this way. And then when this is filled, I'm left with half a position. So then I can go back in and raise up my stop to be wherever I'd like to put that at. Okay. Not bad. I think that was a worthy trade on Co-op. We'll give that the benefit of the doubt. Maybe that wants to move up. Now, what about a breakout trade? We've got a little bit of time left here. Not much, but anybody seen any good breakout trades lately? Well, I saw one today, but I think it's already made a pretty big move. And check that out, right? That's beautiful resistance here. Gapped up higher. Not sure what their news is. I don't see earnings or anything. Pretty big jump up though. Now, if I looked at this prior range, that was from 105 up to 115. That's about a $10 move. So we could have another $7, $8 up to 125. And we're even getting volume to go with it. It's kind of a big move in one day though, 5%. Kind of curious. So what about, well, Robert says AV. Let's take a look. Appreciate you chatting in. Oh my goodness, yep. So the dilemma with this is that, where do I put my target? Now I could determine maybe an exit down here where we gapped up to that. But then you always have to ask yourself too, are you okay with getting in after just, 7.5% move today And from yesterday, I mean, I love when students chat these in because it's like, yeah, that's really cool, but why didn't you tell it about us 2 days ago? Would you really honestly get in after a 20% move in 2 days? If you're real estate, yes, great. But I'd find it very challenging to know where would my target be, and where would my stop order be too after such a big move. And so a lot of traders will say, hey, if a stock has made more than even a 10% move since its last buying signal, then they're taking a greater risk of chasing after it. Now, if Charles has a target of 185, then there again, it'd be like, okay, I've got a $5 move to my target. I'd have to have a very tight stop up here to justify, entering in on something like that. I would challenge students instead to be looking for stocks where you're anticipating the breakout. So where you could be the guy down here waiting for it to break out and hopefully getting in, so then you can have the benefit of the big move. So for example, I couldn't help but notice, I think we might have looked at this even last week, but you bring up Harley Davidson. As I zoom out, what do we have potentially going on with Harley Davidson here? Everybody see it? It's kind of a longer term type of thing. Yeah, maybe a bit of an inverse head and shoulders. I don't know if you can see this, but see that big dip there, like this. Okay, no matter what, we've got a very good neckline right here. What happened yesterday? Sean's got it. Yeah, did we not get a breakout? So if we come back to our rules here, well, we were upward trending. Okay, we were near a resistance though. Okay, so if we're getting a near resistance, then what we look for is that breakout with the volume surge. All right. And yeah, weather's starting to get warmer, maybe more bikers out there, but look at that breakout. In fact, I should have drawn a line there just so we can see that resistance. Let me put our line right about here. That looks about right. Oops, got to lock it into place though. Okay, it's not perfect line, but you get the idea. And now we've got a breakout with higher than average volume yesterday. I think somebody upgraded them, maybe. Put a $42 price target even. Not that I put a lot of weighting into what their targets are, but kind of curious too. Look at that nice little hammer. Beautiful little hammer. That's a perfect hammer, actually. After a pullback, got to close above the high of the low day. Now you got the breakout. Now today, a bit of a pause, but so far, I like the fact that we're not even trading below the mid-range of yesterday's big bullish candle. Now, maybe I'd like to buy in on a bullish day, on an up day. But what would be, I mean, just analyzing this, what would be our potential target? Let's see if it makes sense even from risk reward pattern or perspective here. And Randy, you can look at that pattern, still plays out, right? It's just a longer term type of pattern. Well, if this plays out, it might take a while too. So I don't know how short term this would be. Because to Randy's point, if this pattern took a full year to play out, it might take a full year to have that full move, quite frankly. But if we're trading around 25 up to, I don't know, 30, 38 maybe. What is that, about a $13 move? So 37 plus 47, well, I guess that makes sense. About 15, that's our prior resistance. Okay, now if you want to treat it shorter term, again, you could just maybe cut that in half and then cut it in half here again. If you really want to make that more of a short-term swing trade. But believe it or not, that could be a very realistic target if this were to play out and breaking out above. Okay, so then for our stop, if I'm a trend trader, I could put my stop down below here. The fact is, if we are breaking out, then remember we should want to use this resistance as a new floor. Or I could just be more demanding, put it around, that resistance there at 38 that we just recently broke out above. So let's do that. Let's just say we put in our stop down below 38. Let's just call it like 37.5. If I'm entering in around 39, My stop's around 37.5. It's losing about $1.50 roughly. Okay, that's my risk. If my reward, we said, oh goodness, it could be around 50 for the longer term. If I made 45, though, if I just made that halfway, I'm just looking at this, kind of eyeballing it, thinking that's about halfway. That's about a $5 move. So that, this certainly either way would qualify as more than a 2-to-1 reward to risk. Okay. If that were to play out, let's see, my stop would be down below here. Let's say around 30, 37.5. Yep, down around here. All right, let's try that out. If I'm at 39, if I just allocate, say, $5,000 into that, divide by 40, be about 125 shares. Since we're not following through just yet today, maybe we'll just scale back a bit, just do an even 100 shares. I could live with that. So let's just go through the steps again. Let's come back, right click, do a buy custom with OCO bracket. I can make this 100 shares. Just buy it today. Okay, our initial target we said would be, I forgot already, what did I say, 45, I think? Well, I take it back. That was just, that's just if I'm treating this shorter term. So let's make this halfway to there, to 45. Let's say 42.5. Let's get out of half of our position. And then my stop, and again, let's just make this half of our shares 50. And then we'll sell all of our shares. If unfortunately the stock comes down, instead of going up higher, then we'll be stopped out below 37.5. I'll just put in like 37.43. Okay, that could work. Confirm and send. I'll say that we have a potential, inverse head and shoulders pattern, breakout with volume. Ultimate target was at 50. Okay, use old resist as new support to exit. Let's send that off, show you what that would look like on our bracket order. So come back to our charts. So it's kind of fun about the thinkorswims. We can have these on our charts. If you don't see those, just remember to go up above, click on your settings, and make sure you've got your show orders and your show trades on the chart itself. Yeah, maybe a little bit premature because we are down a little bit today, although not really by much. I'm pleased so far that we're at least using the mid-range of that big bullish day to remain above. That's actually a bullish signal, and not a lot of volume on a down day today, although the day's pretty early. Now, if you find that on the breakout trades that you're getting kicked out, only to have the trend continue to resume, then you might tweak your rules and say, no, I'm going to go ahead and put in my stop below here, because that is our support. We don't really know if this is going to be support just yet. We're just assuming it will be. But I still put my exit below there. But if you, like I say, if you get kicked out too many times, then adjust your rules to where you put your stop below here, and maybe you scale back a little bit on your position size, right? Just buy fewer shares in case it does break through that, and then you're kicked out. All right, not bad. I don't know why they'd really move up other than a few upgrades, but I know they boosted their dividend too, so it's kind of nice to get a dividend for owning onto the shares. Kind of cool. We'll see if that'll play out or not. Like I say, those are just a few examples, but they're out there. My goodness, a lot of stocks that are breaking out or bouncing up higher. You've got Dow here trying to break out above some pretty decent resistance here on some volume. Still moving on up even today. Well, not up much today. I was keeping an eye on the likes of even things like Cisco, although its trend's not the best, have to admit. Right, we're downward trending, but it did get a higher low here. Look at that little hammer, and now trying to get a little bit of a bounce up. It's probably premature though. but you get the idea, right? Be on the lookout for those setups and then treat it short term. And it's kind of nice with those short term trades because then you're not in wondering what's going to happen overnight that much, right? You're just in it for the shorter period, locking a little bit of profit while you're waiting for the markets to behave or waiting for your overall longer term trends to start to take off again. And so it makes, it's just kind of nice to generate some trades and some revenue coming in while you're waiting for the other longer term trades to turn out. So question, what's the lowest profit level you're comfortable in setting up a swing trade? It really, quite frankly, boils down to me more the reward to risk. Sometimes I admit I'll put in the trade. I'm just buying a few shares because it's an expensive stock. And at the end of the day, I'm thinking, well, why am I maybe only making $100 or $200? And I'm like, doesn't really excite me much, but it's still profit, right? But I really try to look at it more from the reward to risk. Does it make sense? Now, if we were already, well above an entry point to where my exit's up here and my exit's way down here, then I'd probably just choose to skip it. I can still make money, but again, it doesn't make much sense. And if you happen to have that happening too many times, then when you are wrong, which will happen, then your loss is going to wipe out of your prior gains, and that's no good. So really, the ultimate goal would be try to get a 2-for-1. Sometimes you'll get a 2.5, 3-to-1. It's like, oh wow, I'm buying right at the support, got a beautiful move to the upside, potential. And if I'm wrong, I just get out because it breaks down below where I'm buying in at right now. That it's like it's kind of a no-brainer because you're going, well, yeah, I've got to do that trade because if I'm right, I'm gonna have a nice, wonderful gain, and if I'm wrong, it's just a tiny little loss, not a big deal. Like Patty's comment saying that, yeah, if you've been kicked out, then give a little bit more room. Yeah, and I agree with that because I don't go in with any trade with the idea that I'm just going to look to get kicked out, right? I don't want to be stopped out, and so that's why I say I'm not too keen on just an arbitrary number. I'd rather look at the chart graph, like right here. If we were to enter in, clearly that should be our support at 48. So I'd put my stop below 48 by a little bit, just to give a little bit of breathing room in case it ticks down a little bit. But the reality is, if we're truly upward trending, it shouldn't even come down to that same low. It should find a higher low, even if it did pull back. So I've got every right to be kicked out if it does break down below that low. George is pointing out that the ABEO. Ooh, wow, that's a very nice move. Okay, be careful about earnings too. Want to be careful about getting in right before earnings. We've got a little bit of time until that earnings, but that's had an incredible breakout. So I'm assuming we're well above some moving averages. As I zoom in, did have a nice volume surge. Okay, that bursted out above. These are getting a little bit more challenging. You might have to zoom out to see where might we go up to. This, this is on a 2-year graph, so this is probably maybe a new high, perhaps. Well, it did hit 936 from way long a ways ago. We're just kind of sitting right there now. Go to a 5-year graph. Wow. Yeah, make sure it meets all of your other rules too. Admittedly, there's not a lot of volume on this stock. Traded daily. Make sure it has good fundamentals. Fundamentals won't be the most important thing. I'm just looking for momentum because I'm not really holding on to it, just trying to do a shorter term trade. Do you see support here at 26? Potentially could hit that area as resistance. Just, I don't know, a little bit more aggressive after such a big move. I mean, we've already doubled in this last month alone, haven't we? From 4 up to 8. Pretty impressive. Question on what happens with dividends. Well, again, if you're a holder of the stock, then great, right? As long as you're in that before the ex-dividend date, then you're eligible for the dividend. Now, if you're in a taxable account and wanted to use, have what they call a qualified dividend, then you'd have to still be in that trade for, I believe it's 60 days, over that 120-day period around the dividend. So we've talked about that in different classes, but if not, then your dividend won't be qualified as a qualified dividend, so you'd have a little bit higher tax. It's just your income, regular income tax level on that, but we won't get into that. What happens if the stock goes up and triggers sell at T1 and then drops to stop loss? Yeah, so that is a potential danger. If I've got a like we did on co-op. Now the question is, what if it comes up, hits this, which cancels out our stop order, and then immediately falls down? I guess that technically could happen. Yeah, now you're unprotected. But like I say, you should be notified when you're, by at least that night, you'll get an email that says, hey, your trade went through. But I like the idea of someone mentioned earlier, you could put an alert if you'd like to. So you get, the text message if you prefer. They'll say, hey, you've been kicked out, you locked in half of your profit. So like I say, we would just go back to our monitor tab and create that new OCO bracket and put in our higher amount. I've not had that happen to me before. I have had where I was kicked out while on vacation. Thankfully, the stock just continued to move up. And then when I got back, it was like even above my other target. So I was like, oh, that's a nice surprise. So it's just like, okay, I had to have a position to where the stock was just trending up very nicely. And then I followed my rules and just went ahead and got out, locked in some profits. But like I say, swing trading does take a little bit more maintenance than it would be just with a buy and hold. Janet, do you put in stops before earnings reports? Well, I do with a swing trade. We'd want to be out before an earnings, because earnings to me is just a gamble, right? Now, if you're okay with the gamble, then yeah, I would probably not even have the stop or the limit. I would just take it all off and say, okay, let's see what move the stock has, because you've probably seen that, right? Where you'll have an earnings and it gaps down immediately, and then even by the end of the day, it's already trying to move up again, or vice versa. So I don't want to just get whipsawed out because of the volatility that you have on an earnings announcement date. But to me, that's probably more gambling than it is just trading with the system. All right, very good. Well, I better wrap this up. So this is on buying on a support. We also talked about what do we do for near resistance. Pretty simple, just buy on that breakout. Break defined with the higher than average volume. Okay, and this is just, like I say, one way of trading. I always like to bring up this slide. There's a picture of a map here of a town called Trade, apparently. I believe it's in Tennessee, I want to say, if I remember. But I like this visual because you'll notice that there's more than one way to get to the trade, right? There's more than one path to get there. And so we've just provided some ideas that you can take and amend and tweak it, customize it to your own. And that's all that matters, right? There's more than one way to get to that final point, which is getting the trade in. But try it out. Go in your paper money account. I'll tell you this: I don't know of too many firms that even offer those bracket orders. I mean, to me, how nice is that? It's really, in a way, as I mentioned, just kind of a nice way of automating your trade. I don't even have to be around, and I know that at least one of the two orders is going to fill. Either it'll move up, I make my money, great, or if it comes down, I get kicked out. I've minimized my loss, so I've got a protective stop on there. So that's what's kind of cool. Okay. Very good. Oh, Mary says she can see my house from here. That's cool. All right. Well, here's your next steps: is to try it out. Start with stocks that you're familiar with. Go through a quick technical analysis. Ask, does it meet your swing trading rule for an entry point? Okay. Use those bracket orders to more or less automate that trade, and then just practice like crazy. It's kind of fun where on occasion when the markets are being temperamental and they're just kind of bouncing up and down like this, I'll have maybe a half dozen or dozen or more of those swing trades going on. I'll just be sitting here and all day long, ding, 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 ding. It's like all these trades just going off all of a sudden, because notice how stocks tend to move together. So when the markets do finally take off, then maybe I'm hitting my targets on all my stocks. So I'm getting all these dings and realizing, hey, it's like a cash register, just generating my income or generating my returns on those very short-term swing trades that are already plugged in for me on those bracket orders. Okay. Well, I hope this is helpful for you. Kind of open up your eyes to how we go about doing these swing trades. Pardon me. What we'll do is that we showed you how we trade this to the upside. Now we're just taking it a step further, where next week we'll talk about what do we do when the markets don't be bullish. What if we are near highs and we start to come crashing down? Hopefully not. I don't think we will, but let's be prepared to show you how we might trade to the downsides. We'll talk about that next week. Now, if you need help with your orders, remember we're not the brokers, so you want to reach out to them. They can help you out with your live account and with your trades that way with Thinkorswim through Schwab. If you have questions on brackets, though, you're welcome to ask that. We'll have another Q&A later today. I think Gary teaches that on Wednesday. He's familiar with these orders too. He'll do a great job in helping you out with there too. All right, I want to thank everyone for tuning in. Have a great rest of your day. I'm looking forward to this market to hopefully continue forward. We've got the Fed chairman testifying today in front of, I don't know if it's the Congress or I think it's Senate tomorrow. So hopefully he doesn't say something stupid. In fact, I think already I saw an article that said that he did more or less say something to the effect that, yeah, they anticipate lowering rates, but again, only if inflation can really continue to drop to that 2% level. So there's no guarantees, but they are, they are looking to want to lower rates, which is a good sign. But I wouldn't put a lot of meaning into that. That they're going to lower rates by March, like they were all jabbering about last November, which I thought was nuts because the Fed's never said that. It's just the media really wanted to put a lot of hype into it. So anyways, but like I say, if we can have the Feds not say something stupid today, then I think the markets have every reason to want to continue to move up even more. All right, thanks everybody. Have a great rest of your day. Test out those swing trades. Tell us next week how you did. Share with us some successes you've had with that strategy. Love to hear about it. Until then, have a great week. Take care, everybody.